Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karamali, live from Yahoo Finance's studios in London. It's Tuesday, 9th September. Coming up on the show, all eyes on Apple later. Will the new iPhone 17 lineup deliver? I'll tell you why today's jobs data revision could have massive implications. And Succession finally reaches a resolution for the Murdoch family, and that's having an impact on the markets. So grab your coffee and let's own the morning. So can Apple revive the hype around the iPhone? Well, the tech giant is expected to debut its latest iPhone and Apple Watch lineups at its marquee event. Today's event will be crucial for Apple. While iPhone sales have been strong, as Apple's most recent earnings report indicated in July, consumers are only upgrading when they feel like it. Now, and unlike Android rivals Samsung and Google, which have leaned into artificial intelligence on their smartphone software, Apple Intelligence is expected to take a backseat during today's event, even as perceptions continue that the company lags in AI. And that's seen its share price suffer against the rest of the Mag 7, as you can see here. Our technology editor, Dan Howley, is covering the event for Yahoo Finance. He sent us this dispatch when he arrived in Cupertino yesterday.
We're here at Apple's headquarters in Cupertino, California, where the company is set to announce its latest iPhones. The big deal at this year's iPhone event will be what is expected to be called the iPhone 17 Air. Now, this is supposed to be a thinner version of the iPhone than the standard model or the Pro model, but it could come with some drawbacks. That includes possibly having a single camera and a smaller battery. However, Apple could potentially add some software tweaks that allow it to have, for instance, telephoto capabilities using digital zoom, and perhaps do some kind of wizardry when it comes to battery life and improving it there. The big deal here is, though, that it is a new design, and that's something that usually helps goose iPhone sales. We'll just have to see how that balances with those potential drawbacks. In addition to the iPhone 17 Air, we're expecting a standard iPhone 17 as well as the iPhone 17 Pro and Pro Max. Now, those could get improved cameras. All of them are going to run on the new iOS 26 software, and so we'll have to see if the Air and some of the improvements that we could see to the Pro and standard models will end up being a boon for Apple as far as sales go. There's also talk of a potential price increase to the iPhone, something we haven't seen in some time. The Air in particular is expected to have as much as a $100 price increase. That's according to some analysts. In addition to the iPhones, we're expecting to hear more about Apple's Apple Watch. We're expecting to see the Series 11 as well as the Apple Watch Ultra 3. We're not expecting to get much as far as design changes to the Series 11. We saw some of those in the Series 10, and the Series, the Ultra 3 could get some improvements that line it more with the Series 11. And then, of course, we're expecting to get some new AirPods. Those could be the AirPods 3. The big deal this year, heart rate tracking, similar to the heart rate tracking in these Beats headphones that I'm wearing. Apple is expected to bring those over to the AirPods and finally roll those out. That's what we're expecting. There could always be room for more announcements. Stay tuned.
Well, the first thing you need to know about before that opening bell rings is about a big correction to the jobs data. The level of US employment for the 12 months through March could be slashed by as many as 1 million jobs. The payrolls benchmark revision would come on the heels of news last Friday that jobs growth almost stalled in August, and the economy shed jobs in June for the first time in 4.5 years. It would suggest the labour market was already struggling before President Donald Trump's aggressive tariffs on imports. The next thing to know about takes us to France, where yet another Prime Minister has lost his job. The latest government collapse was widely expected after Prime Minister François Bayrou failed to win support from political rivals for his 2026 budget plans aimed at reducing the country's yawning budget deficit. France's financial markets reacted calmly to the latest political upheaval, though France's borrowing costs exceeded those of traditional European debt laggard Italy in early trade today. And the last thing to know about is all about earnings after today's closing bell. The original meme stock GameStop is on deck. Its shares have fallen around 25% this year. The management is cutting costs, closing unprofitable retail shops and focusing more on the higher margin online business. It's undergoing a dramatic pivot from traditional retail to a cash-rich, crypto-focused investment holding company. But the highlight later is likely to be Oracle. Synovius's Daniel Morgan told my colleague Jared Blickery what to expect.
Oracle's been around forever, right? They were a relational database company. Then they got into enterprise resource planning, which they still are involved with. And then they migrated finally into software as a service, and now they're into cloud. So within that huge installation base that they have, which is about 400,000 customers, they obviously have products and middle software products that facilitate ERP and database that are also AI focused. So I think that's how we have to kind of position Oracle right now as an AI trade. I think it's a little bit different than, let's say, an NVIDIA or a Broadcom or an AMD, because they're involved more on the software side.
Yeah, really helpful there. I want to talk about the multi-cloud here, and hopefully in plain English, we have, as you've been saying, Oracle has tie-ups with some of big cloud here, and they're expanding that market. How does this fit into their business when you consider that they also have Oracle Cloud Infrastructure, or OCI? Does it cannibalize that business?
I don't think so, Jared. I mean, they've come out and been pretty, forthright in terms of their goal to expand this multi-cloud model. You know, they put out a picture of the globe, and they have multi-cloud sites all over, and they're continuing to build it out. So I don't view the multi-cloud strategy as something that could cannibalize, let's say, OCI. I think it's something that is complementative, in terms of their ability to go into, let's say, a CIO's office and kind of pitch this broad-based capabilities that they have, going all the way to the database, ERP, OCI, and then multi-cloud. So they definitely have a lot going on in terms of things that they can offer.
And speaking of a lot of things going on, they are also in the healthcare space, and that's thanks to the Cerner acquisition, which took place in 2022. What's the story there? How does this fit into earnings? What are you looking at?
Well, Jared, that acquisition initially was kind of people like, oh, that's interesting. Oracle's getting into the healthcare area.
Right.
But obviously, healthcare is a very steady type of business. It's not as cyclical as some other areas, and it has helped boost their growth. It has facilitated, an increase in revenues as they kind of move the Cerner revenues on top. So I think it's been a positive. It's just, again, expanding that capability of things that they're able to offer. So, that deal was done a couple years ago, and it has been, I think, met with, an applause up to this point. But they've kind of moved on from Cerner, and now they're getting into, the overall huge cloud side of the business.
And expectations are riding high. So just thinking about these earnings announcement, last week we had a disappointment from Salesforce. What are the odds of something like that panning out?
Yeah, if you look at the software space, Jared, it's been really tough, right? You look at Snowflake, you look at Salesforce. A lot of these companies have not really been performing as well as you would like. Microsoft has been performing, but I think Oracle's in a little bit of a different area just because they are making this huge migration over into the database area. If you think of Salesforce, they're really more software as a service, right? That's their niche. Mm-hmm. And I believe that Oracle is more focused on infrastructure as a service. So I think that gives them a little bit of a leg up. And, we're looking for a great print out of them. Their backlog on the last quarter was $138 billion. It's expected to be $149 billion on this upcoming first quarter. So we're looking for big things out of Oracle. And, Jared, sounds like you've been in this for a while, like me. I wrote a piece that talked about how I thought on that fourth quarter print that it might have been a watershed moment for Oracle, kind of like Microsoft, 7 or 8 years ago when they finally broke out of enterprise and got into cloud. So we'll see if that comes to fruition.
Time for a quick break, but coming up, we'll be asking, what are the chances of a recession? Stay tuned to Yahoo Finance. Welcome back. Time to dive into one question that has made its way on everyone's mind in the past few days. With such weak jobs data, and even if the Fed was to cut rates imminently, what are the chances of a potential recession? Well, Yahoo Finance executive editor Brian Sozzi attended the Goldman Sachs' Communicopia in San Francisco, where he sat down with Jan Hatzius, chief economist at Goldman. You don't want to miss his insights.
I think this is a market trying to figure out what in the world is going on with the U.S. labor market. It has really decelerated. What is going on with the labor market, and how bad could things get?
Clearly, employment growth has decelerated. Right now, we're looking at 29,000 on average new jobs created in the last 3 months. this is a preliminary estimate. We've learned that these numbers can get revised, but I think it's quite clear that employment growth has fallen to levels that are below the longer-term labor supply trends. That's why the unemployment rate has started to edge up. That's why household employment to population ratio has come down. So I think in our baseline, this is a period of weakness with an increase in the unemployment rate or of another couple of tenths maybe, that then starts to recede as we go into 2026, when we have the economy picking up a little bit for a variety of factors. But you have to watch this, because this is a time when there is a risk of a sharper downturn. And as a policymaker, as a Fed official, you're going to be particularly focused at this point on labor market development.
What is your probability that this is a deeper downturn?
Well, we have said probability of recession over the next 12 months of 30%. That's where we are currently. I think that's not too far from the consensus. Last number I saw was somewhere in the 30s. It's come down a little bit because on the GDP growth side, things actually have been a little bit better. And this, it's the passage of time. If something doesn't break for a period of time, then you're more likely to sort of get to the other side. But there's still a risk, and that's why policymakers need to watch it.
Is this economy, could you consider it stall speed?
I think we are close to stall speed. Where exactly we are relative to stall speed is hard to know, but that is the historical regularity, that the unemployment rate either doesn't go up at all or it goes up a lot. And there's not a lot in between. You can sometimes see a few tenths of a percentage point of increase, but usually if it's more than half a percentage point or 3/4 of a percentage point in a short period of time, that is a recession. We're not there yet. The unemployment rate's still low, 4.3%, but it requires vigilance.
You mentioned that the economy could be reaccelerating into next year. What are the factors that would do that?
Yeah, so just to be clear, in the remainder of 2025, we still think it's going to be relatively slow. But once you get into next year, I'm expecting the Fed to cut rates. I think they're going to deliver 3 cuts in September, October, December, and then probably another couple of cuts next year.
Or 3, 4 or 5? I've heard as much as 6 or 7.
Well, we have 5 cuts through the middle of next year, so 125 basis points from here. That is a supportive factor. Fiscal policy is going to turn expansionary in the first half of next year. This year, fiscal policy, if you include tariffs in fiscal policy, is a drag on growth. Next year, fiscal policy is going to be a boost to growth. So that's probably going to help. And then it's just the passage of time. I mean, if we manage to get through this slower period, then I think the risks that weakness feeds on itself diminish.
Clearly, of course, rate cuts now coming into focus, markets trading up on that. As the chief economist at Goldman Sachs, how worried are you about Fed independence, or is this just a talking point?
Well, I think independence of monetary policy is very, very important, and we have done significant research on this. There's a lot of academic evidence that independent monetary policy over time delivers lower inflation rates, and you can see that in a variety of ways. You can just look at more independent central banks versus less independent central banks, what average inflation looks like in those two cases. You can look at changes in the legal status of central banks and monetary policy committees, and if it moves in the direction of less independence, you do end up with more inflation and vice versa. So it's certainly something that we're focused on.
The Fed has challenged the Trump administration has challenged Fed independence. It has also challenged the quality of economic data. As someone that crunches numbers and has been doing this for decades, do you still believe in the quality of economic data in this country?
Well, I think that historically, U.S. economic data has been really preeminent in terms of quality, and that's particularly true for the labor market numbers, where there is a lot of very timely information. You get weekly data on jobless claims, 5 days after the week to which the release refers. You get very comprehensive establishment survey and household survey data just shortly after the month during which the event occurred. So all of that is not necessarily available in many other countries. Now, it is true that economic data is imperfect. Government data is imperfect. Private data is imperfect. I'm a big fan of averaging lots of different indicators that purport to measure the same thing in order to get a more accurate picture. And there's certainly room for improvement, speeding up benchmark revisions, building new information about new firm creation into the payroll data more quickly. So, but that is going to require resources. And I do think that spending those resources, it has a high payoff because we all benefit from having the most accurate data possible.
So true, and congrats on your award. On crunching some of this economic data, I know you're one of the best in the game. Jan Hatzius, Goldman Sachs Chief Economist. Always nice to see you.
Thank you, Brian.
Brian Sozzi there, catching up with Goldman's Jan Hatzius yesterday in San Francisco. And we'll certainly watch this week's inflation data very closely here at Yahoo Finance to help you understand what's next for the economy. Well, let's just take one more short break. We'll bring you trending tickers and we'll tell you about a very dramatic succession battle that's come to an end. First, we're going to watch Fox Corporation. The stock is down heavily in pre-market this morning after news that the Murdoch family ended its succession battle. The company is also going through some major moves like a secondary offering. So there are a few moving parts here, but the part that's getting a lot of media attention this morning is obviously that Lachlan Murdoch, Rupert's eldest son and CEO of Fox Corporation, will secure control of the media empire that includes Fox News, The Wall Street Journal and many other publications. The deal announced by the family ends a bitter legal battle for the succession of the 94-year-old patriarch by distributing some revenue to the other siblings while securing Lachlan's control over the business. The wedge between the siblings is said to have inspired the HBO series Succession. Okay, now let's move on to artificial intelligence with Nebius, another provider of AI infrastructure that is on a roll. The stock of the Amsterdam-based Nvidia-backed company is in full throttle this morning, surging more than 50% after hours on the heels of a massive AI cloud infrastructure deal with Microsoft. Under the agreement, Nebius will provide GPU-backed compute capacity from a New Jersey data center through 2031. The deal is valued between $17.4 and $19.4 billion. This gives another major boost to stocks that has already more than doubled in the last 6 months. This news is being seen as a major validation of Nebius's AI-first strategy, especially as hyperscalers scramble for compute capacity. And finally, another stock we've been covering here on Yahoo Finance and is worth watching again today. EchoStar is up more than 6% in pre-market after it closed nearly 20% higher yesterday. You may have heard it here last night that's thanks to a blockbuster agreement with SpaceX. EchoStar will sell wireless spectrum licenses for $17 billion in cash and stock, aiding Starlink's expansion, while also resolving FCC regulatory issues. It's a high-impact deal that aims to boost connectivity in remote and underserved areas. Now, as you can tell today, even if September is traditionally a complicated month for trading, there are some big opportunities out there that you don't want to miss. Larry Tintorelli from Blue Chip Trend Daily Report shared his take on the stocks and sectors you should watch this month.
There's been a really strong rotation into rate cut beneficiaries, home builders, small caps, even biotech and solar, regional banks, things that benefit from rate cuts. With the home builders, what you're seeing is a long-term trend reversal. You've got a weekly uptrend on the charts. They recently reclaimed the 40-week moving average. You've got stocks like DR Horton, Toll Brothers that are breaking out. And the market has moved into these home builders really over the past 6 weeks or so, 6 to 8 weeks, based on these Fed rate cut expectations. And historically, once the Fed starts to cut rates, and I know they've cut rates before last year in the cycle, but once they start to cut rates, they generally don't just make one cut. There should be a series of cuts. And the home builders have been leading over the past 8 weeks. And as long as we get the expected rate cuts, I would expect these home builders to continue to lead. Very strong charts.
Okay, for market movers, we're going to focus on mergers. First, a big one in the mining sector. Anglo American has agreed to acquire Canada's Teck Resources, creating a company worth more than $50 billion. Anglo shares rose in early trade in London this morning. The deal marks a big bet by Anglo on copper, demand for which is forecast to rise sharply, driven by the electric vehicle boom and emerging uses such as AI-powered data centres. US listed shares of Teck were also up sharply. Now, Anglo Teck will be headquartered in Canada, but have a primary listing in London. Our next merger takes us to banking and Italy. Banca Monte dei Paschi di Siena has secured a majority stake in Mediobanca, cementing a once unthinkable €16 billion takeover that's set to reshape Italian finance. The deal is set to create Italy's third largest lender by assets. Now, it's worth noting that the Prime Minister, Giorgia Meloni, has always wanted to establish a new large bank that can rival Intesa Sanpaolo and UniCredit. And our final deal takes us to healthcare. Swiss drug giant Novartis will acquire Tourmaline Bio for $48 per share, valuing the New York-based biopharmaceutical company at $1.4 billion. And just look what that's meant for Tourmaline's share price. It's up over 58% in the pre-market. Okay, before we go, let's have a final check on futures. And US stock futures are in the main nudging higher as investors weigh up the prospects for interest rate cuts ahead of key inflation readings we'll get later this week. Watch out today at 10 a.m. Eastern for the jobs data revision 2. And moving on to the European boards now, and European stocks are in positive territory today so far, with those rising expectations of a rate cut from the US Fed offsetting political uncertainty we're seeing in France following the government's collapse there. And finally, a quick look at Asian markets. And Japan's Nikkei fell back. It had hit an intraday high following the political turmoil in the country after the Prime Minister there resigned. He was a fiscal hawk, remember. Now, the rest of Asia was in a more positive mood following Wall Street's lead yesterday. Okay, that's all that we have time for, and that's it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join me ahead of the market open on Morning Brief at 9 a.m. Eastern, and we'll be obviously watching that Apple event very closely as well. I'm Ramzan Karamali. Go own the morning.